Sorry, folks. Sorry. All right. Luckily, I glanced across at the notes there. This is one of the problems with the software. I'm sure you can hear me now. Could you give me a yes if you can hear me? And I'll start again straight away. Sounds like it's coming through. All right. You didn't miss anything. Don't worry about it. Let's go back to where we started. And this is the 4-hour chart on Bitcoin. I'll be covering Bitcoin in this video. And at the end of this video, automatically, YouTube will switch over to the natural gas video, which I pre-recorded. I've done that in order to not run them simultaneously with this live stream. So as soon as we're finished here, we should switch over automatically into the natural gas portion, which is also then stored as a separate video. This is a 4-hour chart on Bitcoin. Those two little dots at the top there, the little round red blobs in the middle of the screen, is where we got out of Bitcoin on that rally to new all-time highs. We started buying again quite soon after that, thinking after achieving the new all-time high, we would carry on up to about 104, maybe 94, let's say somewhere between 94 and 104,000. But we've pulled back quite a lot, and we're down into the low 50s right now. I said what I was going to do before I switched the microphone volume on was look at the longer term chart, and this is Bitcoin. Okay, fantastic. Thanks, Boring Channel. You're the one that gets super cross if you can't hear me properly. So I'm glad I sorted it out for you. It's just joking, of course. Now, what we have here is the Bitcoin quarterly chart. Every one of these bars, candles, some people still use bar charts. So if you're using a bar chart, that's okay. I used bar charts for a very long time, and there's nothing wrong with them. But candles give you a little bit more of a visual sort of idea of what's going on. This is so each candle here is 1 quarter, in other words, 3 months. And you can see I've divided this roughly into 21-month cycles. Now, I'm not a cycle trader myself. I do know a lot about cycles, though. And it's interesting to me that sort of lunar cycles, solar cycles, market cycles, instrument cycles, bond cycles, stock cycles, Bitcoin cycles, Forex cycles, no matter which way you look at a cycle, it's essentially the same sort of thing. We're looking for repeating patterns or frequencies, and including frequencies and amplitudes of these cycles. We're looking for waves. We want to know where the highs are likely to be in time and where the lows are likely to be. This cycle trading is not something new. Let me tell you that I was trading, and I got all the books on, this is 22 to 25 years ago, on cycle trading. It was big in those days. Seems to have made a comeback. I see cycle traders all over the show on the internet. So yeah, so let's go with this. There does seem to be some sort of 21-month repeating pattern here. And granted, we don't have much of a database because we've only got a few years of Bitcoin existence, a decade and a bit. So what we have here is not very many candles, but we do have a sort of an idea. Now, we've got 3 moves moving up on this Bitcoin chart. Each one of these you can draw in using TradingView. This is called the time cycle, I think, if you want to know where to get these lines. Basically, yeah, they're cycle lines. So I use the cycle line tool on, and when you draw the first gap, it automatically starts filling them in towards the right-hand side of the page, the hard right edge. So it'll just keep on adding those on. So this is a 21-month cycle, roughly. And what's interesting is that we had 3 rallies during this period. Now, I would expect in any bull market generally to get 3 or 5 waves up, and then maybe a couple of waves down, maybe 3 waves up, 5 waves down, maybe 5 waves up, 3 waves down, depending on how you look at your Elliott wave analysis. I prefer simplicity, basically, most of the time. So when I see 3 waves, I start to get cautious about it. I thought the 3rd wave in Bitcoin could go to 94 to 104,000. That's my target. It's also 1 quarter of of the previous rally. Notice the first rally from down here at about $200 up to around about $19,000 or $20,000 was an 8,250% rally. We then dipped down, started making a low, formed the first point on a trend line, and then moved up, but this time only rallied 2,050%. All right. So no sound. I hope you can all hear me. I can't see what the sound levels are. So someone just give me an inclination that you can hear me, or an indication rather. So we had an 8,000% move. Then we had a 2,000% move. So 4 times less than the previous one. And then on this occasion, we had a 360% move, which is not equal to 4 times or 2050 divided by 4. That should be about $510, 510%, sorry. And that would take us up to about $100,000, which is where I thought we would get. However, we have failed here after making a fractionally new high. This is not an abnormal pattern. Making a new high and then collapsing and crashing down happens a lot in stock markets, in currency markets, in gold markets, in energy markets, all sorts of markets. And the fact that we've tipped a new high may be a false break, you call it what you want, a Wyckoff extension. I'm not 100% familiar with the Wyckoff terminology. I know how it works. I know what the pattern looks like. You could correct me if I'm wrong. But anyway, it's basically a false breakout and then a move down, sometimes only by a fraction. Now, if we have formed a top, and it's quite compelling to think that we may have, because this is a third wave. We've had 2 candles down. These are quarterly candles, so 6 months of downward movement already. And these last 2 previous quarters made a tweezer top, identical highs at the same level. That's a very bearish sign. We don't have a bearish engulfing candle or a tweezer. Let me repeat. We don't have a bearish engulfing candle or an engulfing pattern here with this candle pattern, but we do have a tweezer top. The second part of this tweezer top is also quite small. With a tweezer top, I prefer 2 highs and roughly similar candle sizes. So it's not a perfect tweezer top. Doesn't mean it's a top, but there's another reason to think we may have reached a top. Notice this black trend line coming up from underneath. We'll talk about the 78% pullbacks just now. Notice this black trend line coming up from underneath. We had that first touch. We got a second touch. Actually, we've only had 2 touches. So it's really not the best trend line. I drew this in as an afterthought. Nevertheless, if you did think this was a trend, given there is quite a lot of period, a long time, even though not many candles and not many touches of the trend line, it's quite a long period. So maybe we could, maybe we couldn't consider that to be a valid trend line. However, we did break down through it, retest it from underneath on this candle here, traded underneath it all the way up to here, retested it again from underneath for the second time, and then failed. And for 6 months we've been moving down. We didn't get to the 510%, 507%, I think it is, extension on this third wave up, which means we might have to have a corrective move down. Now, where could this corrective move end up? And we're going to go into the shorter term time frames straight after this. And I'll give you reasons why I think this may not occur. But for now, looking at the broader macro picture, this looks quite compelling to me. Every time we've had these big rallies, we've pulled back precisely, not precisely, we could call it precise, it's close enough. On this occasion, I've written 78.6, I've written 78%. It was actually 81% on this occasion. On this occasion, I've written 78%. It was actually 78.6 precisely, the 78.6 Fibonacci pullback. It's a relevant number because it's my most interesting and most important Fibonacci pullback number. And it clearly is for Bitcoin. Every time we've made these big rallies, we've pulled back 78.6%. Not precisely, but very, very, very close. Now, on this occasion, given that we haven't rallied up to its full potential at 510 or 507%, and we are making what looks like a weak top here, perhaps, as I said, we'll look at the shorter term timeframes and decide that. But if we were to pull back 78.6% to that Fibonacci level, which I've drawn in here for this third chart, or this third move, simply drawing a fib from the very bottom of this move. Let's make it super accurate. From the very bottom of this rally, which is there, to the very top of the rally, which is there, where the trend line is that we talked about just now. And if we take that pullback retracement, if we wanted to get to 78.6 like the previous 2 retracements, and it's not just because it's 78.6 and it's happened twice before. Let me say that again. It's not just because it's happened twice before, but it's because it's such a key and vital Fibonacci number. It is the last chance Fibonacci. Normally, if the price is going to turn around in a trend and it's gone against you severely, let's say we're selling and we've bounced up 38.2, we bounced up 50, we got to the 618, went through, maybe hesitated, pulled back, and then got all the way up to the 78.6%. Remember, in this theoretical scenario we're selling, and then turns around and then makes a new low thereafter. That's a really powerful reversal pattern. The 78.6% Fibonacci retracement number is my favorite number. And we've done that twice on Bitcoin before. Doesn't mean it's going to happen for the third time, but it probably does mean that we might have a go at that, but it doesn't mean it's going to happen from here. We may have to get to that 510% extension, which would take us to around about $100,000. And that would take this move up to more or less where my cursor is right now. I could actually take this trend line up and take it up to 105%, to $105. Let's just put it at 102 precisely. So there's the $102 mark. And then we've got to straighten this line up again as well. So if we were to get this full extension, and that would then change to 510%, not 380. If we were to get that, then the 78.6% Fibonacci retracement number would be slightly different. But if we turn around, I don't know what it would be, but it'd be a bit higher. If we turn around where we are at the moment, at this tweezer top, then the 78.6% Fibonacci is right down at that level, and that would take us just under $30,000, 29,000 and something. So that's the way it looks on this longer term quarterly chart. Let's go to the weekly chart. Let's zoom in a little bit, and things will start to look more and more clear. So, excuse me, I didn't want that. I wanted the monthly chart. Let's go first to the monthly chart and have a look at it there. So exactly the same chart drawn in monthly. There's the 78.6% Fibonacci retracement. I've just written 78 just to keep it simple. And that would take us down to around about $28,600 or maybe $29,400. Pretty inaccurate, but somewhere around $29,000. All right, so we've got that idea. It still looks the same on this chart. There's the trend line break. By the way, there's also this orange trend line coming up from underneath right here. And this orange trend line, although once again, it's only had 2 touches so far, it does cover a long period of time from March 2020 up until today. And if we got down to that trend line and bounced, which also could happen, it would be a little bit unstructural, but I suppose it could happen. That would take us down to the 50. Let's just zoom in. We'll look at this more closely on the 4-hour chart. If we pull back to this, let's make this darker as well. If we pull back to this trend line, let's make this just a little thicker. So if we pull, and maybe the color's not right actually, let's make it purple. There we go. If we pull back to this purple trend line, it would also take us down to the 50% Fibonacci retracement of the move up from this low, where we started at that trend line, up to this recent high, where we've turned around, at least for now. And if we pull back to that trend line, it will also be the 50% retracement level and the shorter term trend line. So it's not the perfect number, but it's pretty good. Or it's not really a perfect trend line because we've only got 2 touches, but maybe this will be the 3rd touch. Let's go into the weekly chart. And if you're ever in doubt, just start with like a month chart and zoom in progressively closer and closer. This is the weekly chart, doesn't tell us a lot. The day chart tells us a bit more, however, and we can start to see the structure that we're forming. These purple and red bars that I've got drawn on here, I'm going to go back to, I just want to explain what they are and then get rid of them if you don't mind. The green ones represent the height of the rallies. Hang on, it's easier on this quarterly chart. Yeah, so the green blocks represent the percentage rally on each occasion. The red blocks represent, for each one of these candles, represent the percentage decrease or decline or collapse. So mostly rallies, a few collapses in between, of course. We know that Bitcoin's been going up and up and up. It's been the best asset by a country mile for a very long time. Even those who denigrate and deny that can't deny those numbers. The Bitcoin detractors can't deny this chart. 8,000% followed by another 2,000, followed by another 380. Just phenomenal, really. But yeah, so these green bars are the big rallies. So I don't have the scale on here, but you can see the size of these rallies is starting to get smaller and smaller. Now I've just drawn a very temporary black trend line just to indicate that to you on this chart. See how these rallies are getting weaker and weaker and weaker. But we're not seeing any more strength on the bear side. These aren't getting bigger. It's just that the rallies are getting shallower. In other words, we had what maybe was a parabolic curve, and now we're starting to form the top of the S of that parabolic curve. So you can imagine an S shape. and we start going up rapidly in a parabola, then we start smoothing off and the momentum starts to decrease. We start to get reduced returns, decreasing returns, and eventually this should trade, if it lasts and has legs and lasts into the future for any period of time. Eventually this should trade like a normal stock or a commodity or a futures contract, whatever, and we should be trading within that sort of 1 to 2, maybe 3% daily range, maybe, you know, ideally around about 1 to 2%, like most currencies, which is as stable as you want currencies to be. We want some liquidity and some volatility so that we can trade it, but we also want it to be technical and trade it beautifully and you know, not too violent and vigorous like Bitcoin tends to be. So this is a really good sign, stabling out, becoming more of a mainstream commodity. Of course, all the ETFs, of course, some countries are talking about taking Bitcoin into currency reserves. There are towns and countries and cities that are using Bitcoin as a legal form of tender now, which is all good. And this adoption phase will lead, as there's more volume and more liquidity, will lead to less of this volatility. So these bars are just to indicate that, and I'm going to remove them for the purposes of this, because they do mess up this chart, and I like my charts to be very clean. So I'm going to remove that and just leave what we've got in there, and then zoom back into the day chart, and we can have a nice look around. So here's the day chart, and first of all, I've got to say to you, as long as we're above that level there, that last spike low, massive amounts of liquidity during the yen carry trade unwinding, big stock market sell-off, all sorts of craziness in the bond market and various other markets, Fed speak going mad, markets going crazy. This is what happened to Bitcoin. The moment we hit 48, well, what was the low precisely? 49,000, call it 49,000. There was an enormous surge of liquidity, surging this up, and we went from 48,000, 49,000 in about 3 days back up to 62. Quite phenomenal. We're lingering and lurching and hovering down at this level. I've drawn this big black line in because this is the key level for me. Of course, that level down at the bottom there is a massive level. And if you're going to put a stop loss, if you're looking to buy, I'm long, by the way. I'm not hedged. I'm naked long. In other words, I've got no protection in terms of options. I've got no puts on. I've got no trades in the opposite direction. I'm not trading any other Bitcoin token or coin in the opposite direction. I'm long on Bitcoin, but I will exit my Bitcoin longs via a full hedge if we drop below 49,000. And my target will then be exactly what we saw on this 3-month chart, which will be the 78.6% retracement down here at 29,000 and some change. Let's go back to the day chart. Are we holding here? Are we going to? Well, we had a little bit of a spike on Friday. Liquidity over the weekend is very thin, so don't read much into any of that. That's just mainly the retail traders and the incels in their basements playing around with their Bitcoin accounts and their wallets. But there's no serious money that gets traded over the weekend. So anything that really happens here, apart from the previous weekend, when we had that big spike, that was a Monday. Actually, that spike was on a Monday. So even the weekend before that, there wasn't a lot happening. So that was a Monday. So don't expect a lot of liquidity and don't read much into any of these moves as we faff around and fiddle around while the retailers have their day. Now, so what are the retailers doing at this level? Well, we've just broken down through that black line. That's the one I like. I wanted to hold there. This is a 4-hour chart, little bottom there. I wanted to hold that black line. We've broken and closed beneath it on the 4-hour chart. That's not nice, which means we're probably heading a little bit lower. But we do have the spike low from Friday at around about 52,000 and a half. And that's the only point at which I'll be taking any action whatsoever. And the action I will be taking, I think, is to sell and fully hedge my Bitcoin for a journey down to 29,000. If we do not get that journey down to 29,000 and I'm hedged and we start making, and we make if we make a higher high on the 4-hour chart, let's go back to the 4-hour chart. When do we start seeing a reversal in this? Well, we've got to start seeing some higher highs. On this 4-hour chart, we haven't seen any. So let's put in a trend line to start with and maybe some Fibonacci's. We can see the order block here. That's those red blocks on the chart. And why I'm going with orange, I have no idea. So let's go with black. Black's always good. There's our downward trend line on Bitcoin. And essentially, until we first of all get above the 20-period moving average on this 4-hour, and then above the 50-period moving average on this 4-hour, and this downward trend line, coincidentally at the same price. And it's also this big sort of support and resistance level, a lot of activity there, probably a lot of liquidity. But I think most of the liquidity here is around about the 60,000 level, as you can see depicted by these order blocks. If I were to put a volume profile on here, which I don't really feel like doing, but I can do it if you really want me to, and I can never choose the right one because I don't use these profiles all that much. And sometimes we want the sideways one. I don't know how we get that. Session volume profile, maybe, I don't know. Anyway, I'm not going to do it, but you can put that on your own charts. I would imagine the main or the biggest volume is just around 60,000, probably in between these two order blocks. Put your volume indicator on there. You'll probably see it right in the middle in between those order blocks. Also where the 200 and the 100 period moving averages are on this 4-hour chart. Going back to the day chart, let's have a look at where the moving averages are and where that number is at 60,000. So here's the 60,000 level. It's also the 20-day moving average. So this is a huge level. Big order blocks, big volume, lots of moving averages. And until we get above there, we won't be looking, well, I certainly won't be looking to add any long positions. And if we do get hedged on a break below this last swing low after the carry trade unwind trade, if we do close beneath that level there on a daily basis, I will hedge the entire amount for a move down to 29,000. If we don't move down to 29,000, maybe we faff around here. Maybe we, just don't do anything for quite a long time, move sideways, maybe until the rates cut. There's another interesting thing coming up in a few days' time, 2 days' time, and I've made a little note of it here just for your interest. Let's just increase the size of this. And for those of you who are watching politics, you'll be very aware of it. On Tuesday night, it's the Trump-Harris debate, which will be super interesting, incredibly interesting, actually, for all sorts of reasons, whether you're a Democrat or a Republican. I'm neither. I don't live in the US. I have certain opinions, and they're not necessarily aligned with the Democrats or the Republicans in general, more centrist, I suppose. But this could be the biggest debate in presidential debate history, could be the funniest, could be the most humiliating for either party. And it may well decide the fate of Bitcoin, believe it or not. I don't actually believe that. I'm saying that slightly tongue-in-cheek, but there's a lot of people who think that the outcome of this election, and particularly this presidential debate, will have an influence on Bitcoin. Well, if you think that's true, go for it. And if you do think that's true, what sort of influence on Bitcoin will it have? Is it going to be positive or is it going to be negative? I don't think it's going to have any influence at all, but it will be interesting to see what happens in the charts on that day, on Tuesday. So on the day charts, we basically got this level that we've got to hold above, in my opinion. Loads of liquidity grab down there. The next liquidity zone is at the 60,000 mark, where there's 20-period moving averages. And on the 4-hour chart, it's right up here at this trend line and the 50-period moving average. First of all, that's 58.5. But these areas up here, if we can get through there, that's a good start. If we can get through this 20-period moving average on the 4-hour chart, that would be a good start, although very tiny. Through the 50 and the trend line would be a much better start, or it would extend that start. But really, this is the area that we've got to get above, and basically above 61,200 odd. I like the 200 because I like the 200s and the 800s and the round numbers. So 61,200, a daily close above there should see us moving back up to more decent sort of levels. This is the day chart. Now, on the day chart, you can just draw a very flat trend line. I don't have it in because you can just see it by looking at it. But there's a very flat trend line there. And that takes us down to, let's have a look. This is the day chart. So that's up there. This next biggest order block, this is the day chart order blocks, up at around about the 70,000 level. And we've got this long, flat, downward sloping trend line and a flat bottom, unfortunately, forming a flat bottom. And you know what that means. It's very flat. It's a descending triangle. And that's bearish, unfortunately. But let's see how we go. We've got to get above all these moving averages. We know what's got to happen. We've got to get above the short-term trend line at on this 4-hour chart, above the 50-period moving average 20. We've got to get through those order blocks and the big volume level at 60,000. And we've got to get up into this next order block and these trend lines up here closer to 70,000. And that's my scenario on Bitcoin. I don't know which way it's going to go. Right now, to me, it doesn't look strong at all. I don't like the fact that we've come all the way down here, try to bounce. Maybe, look, I mean, it's, real volume will only pick up probably tomorrow early, maybe not so much in the Japanese session, but in the European session tomorrow, starting at 9 a.m. in London, and then probably mostly in the London-New York crossover around about 8 a.m. New York time, which is when the London market, 7 to 8 New York, 7 to 9, call it 7 a.m. to 9 a.m. when the London and European markets are still open, but closing, but still some volume coming from there, and also into the early part of the New York market. And that's when we should see some bigger moves. Until then, we may just faff around and fiddle around and do very, very little. Let's have a look at this in terms of a Fibonacci retracement number quickly while we're on this 4-hour chart. In fact, I'll prefer to look at this on the day chart. And let's make this neater. So I'm going to draw a fib from the bottom here, from the spike low during the sell-off, but coinciding with the Japanese carry trade unwind. And let's see where we are in terms of Fibonacci's. Now, this is really encouraging. And I've been chatting on X today with, I think the handle's effing good crypto. Effing good crypto. If you're here, I'd like to see your comments because you've got an alternative view on this. Effing good crypto over on X says that he's got a cloud indicator, maybe an Ichimoku cloud with some of his own bespoke settings, I don't know, which indicates that we're right at support here and that we should hold here. And normally we do. And the only time that we've ever failed on that cloud level, according to effing good crypto, I haven't had a good chance to look through his stuff. I've had a preliminary cursory look. It looks like this is the line in the sand for him too. Now, this current level, and we don't want to get below. We don't want to retest this swing low at the crypto. We don't really want to test these big liquidity volume panic swings. We want to hold way above those bottoms. We want to hold above 78.6% of the retracement. And if we do that, it's a very good sign. Look at what just happened on Friday. There's the 78.6% retracement. This where the green ends and the purple starts, right there. And the price spiked to precisely the 78.6% Fibonacci, bounced off there, and we've roughly held above that black line, although I did say we pierced it shortly. Now, let's have a look at that on the 4-hour chart. And there's the 78.6, the division between the green block and the purple block. And look how close we came to it. Did we touch it precisely? Let's zoom right in. We may have missed it by 1 cent, possibly. We got down to 52.513. I'm being silly. Maybe it's a few dollars. 52.500. So maybe just like $5 or $10 away from that 78.6%, and a violent and dramatic bounce off there again, and trying to hold this trend, this black line. Now, don't worry about this break here. We are going to get some false breaks over the weekend. Like I said, it's the retail traders trying to make their day trades on the 2-minute chart over the weekend in their basements. I'm being nasty. I don't mean to be horrible to basement traders. I've been a basement trader before. Nothing wrong with it whatsoever. So, so I'm not too worried about this little pullback here over this weekend movement. It's very, very thin market. So we did pull back to the 78.6. We did bounce. We didn't go all the way back down to the bottom of that liquidity grab swing low during the Japanese yen unwinding trade. So maybe this is fairly positive. I think it's probably 50-50. I don't have any particular bias to the upside, right? Although I am long. I'm long until proven wrong. I'm getting very close to being proven wrong. I will be proven long if we close beneath that spike low on this daily chart caused by that grab. If we close beneath there, then then I'll be wrong, and I'll have to exit my hedge. Enter my hedge, essentially exit my long side or my long idea until proven otherwise. But for now, until proven otherwise, I'm still long, even though the charts aren't looking good. My line in the sand, it's always good when you're trading to set up an hypothesis, set up a thesis, an idea, and stick with it until you're wrong, until you're proven wrong. But you need to set up an idea and trade that idea until your idea or your mind is changed. Your mind should only change when there's a structural break or when there's something obvious that's completely obfuscated your your position or your thoughts or your idea or your plan or strategy. If something completely destroys that, then change your strategy, and it will do that to mine if we close beneath that spike low. So the question asked was, so my bias is actually slightly downwards at the moment, the way this chart's looking. And the question someone asked me today was, well, if your bias is downwards, why, or I wouldn't use the word bias, I would use inclination, slightly softer than bias. But if my thoughts are leaning towards the downside, why am I long? Well, I have to remain long because I'm not invalidated yet. My position is not yet invalidated, and it can only be invalidated if we close beneath that spike low on a daily basis. However, it will be partially invalidated if we close beneath this black line. It doesn't mean I'm going to adjust my trades. It just means we're getting closer to a more serious invalidation, which is the bottom of this spike that we were talking about before. So make yourself a thesis. This is the best way to trade, and draw a line in the sand. And in my case now, it's, let's say, 52,000, 52,500. Is it? No, this is the 4-hour chart. Let's go back and have a look at this properly. Where was that? Down here at 49, let's call it 49,000. So it's as simple as that. It keeps my trading really, really simple. I decide what my level is that will prove me wrong. And until I get to that level, or unless I get to that level, I will remain in the chosen direction that I've traded. And then the next thing I have to do is to manage that trade within those parameters. You can see that this low is a long way below me. And I always had to allow for the fact that we could break and close beneath that low. And so I had to position my Bitcoin trades accordingly, not going all in, not going YOLO, FOMO, all at the top there when we broke 70K and started moving up. And we pulled back. Yes, we had a higher high, breakout, pull back, get in, add some more longs. We actually took profit at the top there, and then only started adding in partial, smaller tranches of longs as we drop down. I've still got a 15% availability on this trade. I'm only 85% committed. So if we do get close down to the spike low, close enough without breaking it, I'll add that last 15% on. Maybe if we get to 50,000, 49.8, something like that, or 50.2, I'll add on the extra 15% with a very tight stop loss or hedge reversal with almost no risk. So I always keep that little bit left over for that in case. It's not really a word for that scenario. And I don't put all my eggs into one basket, particularly if we've had such a good bull run. Now let's go back to this 3-month chart and try and solidify what I've been saying. So we've had an 8,000% rally, followed by a 2,000, followed by a 400%. Should have been 500, hasn't got to 500. Maybe it still will. Every time we've had 78% pullbacks to the 78.6% Fibonacci number every single time. Let me just show you on this last one. I'll just prove it to you in case you don't believe me. If I draw a line from the top to the bottom there, actually it's the wrong line. I've got to draw it from this starting point. Where is it? Down there. So you can see this one actually pulled back a little bit further than 78.6%. It was about 81%. So now let's draw this line. Let's have a look at the next pullback. Was that 78.6%? Let's have a wee look. Yeah, that was precisely 78.6% there, as you can see. The purple line, the purple zone and the green zone, the line between those two is the separation between the 786 and the full retracement. So that the bottom of this green block is the 78.6% Fibonacci. Now, and I've just drawn, I'm going to take that one off, and I've just drawn in this from this last rally, which I've still got on my charts, there's the 78.6. If we repeat what we got there and what we got there, if we repeat that, we will get down to 29,000. If we don't repeat that and we rally first up to 94 to 104,000 at that 500% rally height. So all I'm doing is taking 8,000, divide that by 4, you get 2,000, divide that by 4, you get 500. Roughly speaking, I'm not using exact numbers here. And that's the decrease in the returns that we're getting on Bitcoin. Quite dramatic, 4 times less every time. And so we're flattening out into what I hope, and eventually, and the Bitcoin maximalists and hodlers and YOLOs and FOMOers will all be hoping, is that Bitcoin eventually transforms itself into a stable, beautiful, trading asset like gold, like the euro, like it, any other commodity, but that it won't be a fiat currency like the euro, but it will be more like gold, perhaps, and more like some of the other valuable things like platinum, silver, palladium, silicone, titanium, anything that's useful and that's valuable, that's difficult to get out of the ground. Well, Bitcoin's useful, not so much yet, but it will become more useful. It's valuable because people think it's valuable, not because it has any intrinsic value. It's a big argument against Bitcoin. And it's also quite difficult to get hold of because it's expensive. And if you don't have the money to buy it and you have to mine it, you've got to buy a lot of stuff to be able to mine it, and you don't get an awful lot back for your mining activities and for the money that you spent on your hardware and your electricity. And that's Bitcoin, everyone. I don't know what's going to happen next. We're either going to get to 104,000 or thereabouts and then pull back down to about 30 or 40, or we're going to not get any higher than where we are right now. We're going to pull back to 29,000 and then hopefully rally from there if we repeat this ongoing pattern. And that's it, really. So having said all of that, I'll glance through some of these questions, see if there's anything that anyone's got to say. I'd really welcome some discussion on Bitcoin. We've got 23 minutes until the live, not the live stream, what do you call it? Premiere for the NatGAS chart, or NatGAS video comes up. So when that starts, this will finish. So we've got 23 minutes. I'm going to go through some of the questions. If you've got anything interesting up here, I will read it out and answer it. First one for Romain. Good day, Romain. Always nice to have you. Hi, James. Thanks for that. Are you buying WTI? Yes, we did buy WTI. I'm going to come back to some of the other things. I'm going to try and clear out the Bitcoin questions or comments if there are any. So we'll get to some of the other things a little bit later on. Alan, good day, Alan. Nice to have you here, mate. Bitcoin price is based on liquidity. Recessions make people sell assets to survive, creating more supply. A crash is coming. Yeah, so this is the problem with Bitcoin as well, which people often overlook. People see this great underswell demand from the ETFs and BlackRock and governments and adoption by people and increasing market cap and so on. But what they don't factor in is the fact that Bitcoin is one of the first things to go when people need cash. Now, people certainly need money right now, and Bitcoin, it's more difficult to sell their stocks, very difficult to sell their gold and silver. Some of the other things that they may own, like property, very difficult to sell, or expensive vehicles, Rolex watches, very difficult to sell. But Bitcoin, super easy to sell, and that's the first thing that goes because it's so liquid, and because it's not perhaps fully trusted yet by the general public, maybe even some of the hodlers and the diamond hands. Despite what they say, I don't know what they're thinking. But yes, it is liquid, and it is probably more readily sold off than other things. 5%. So Boring Channel, nice to see you. Sending out your comments. 5 to 10% move up in Bitcoin over the next 2 weeks. Then we move down again for the next 6 to 8 months. 35K inbound. Yeah, it looks like 35 or even lower, I'm afraid. Unfortunately, that's the way it looks. But we'll see. I'm a funny man, the Apis trader. Well, yeah, I try to be serious most of the time, but things are. I mean, if you take life too seriously, it becomes a bit unpleasant and intolerable and boring. Right, now let's have a look at Romain's question. Well, now, folks, and I'm not sure if effing good crypto's in here. If you are, please put up your comments, and if you'd like to, perhaps you could jump on the stream and show us your charts. Maybe we can do that another time if you are here. Maybe you're not. Right, now I'm going to go to the WTI chart. Any questions on Bitcoin, folks? I'd like to know how you're positioned. Who's long? Who's short? How are you sized? Are you all in, fiddling around? Are you short Bitcoin? I'd be super interested to hear what you hear. From what I see on the interwebs, most people seem to be uncertain. A lot of people have turned bearish, including some of the more well-known YouTube channelers, which I've never seen before, which is unusual. Seeing a lot of the hodlers and some of the bigger channels getting bearish on Bitcoin, which also actually makes me feel slightly more bullish, by the way. So yeah, just to keep that in mind. So that's where we are. But I'd love to hear what you are. Are you short? You long? What are your positions on that? Let's have a look at WTI. These charts are not live, so we went long on WTI at the bottom here on Friday. So I can put another red arrow in here. This will be the first time we've been long on WTI, actually, since, as if I might be wrong on this. Those in my private group can let me know. But I don't think we've been long, at least certainly for the last year or so. Definitely not for the last year. Maybe a couple of years before that, but not. We haven't been long for a very long time. Now so that means I'm going to put in a green arrow marker up. We've got our first green arrow right there at the bottom of that trend line. And so this is what I'm hoping for on oil. And this chart is not live. It's the weekend, so it's not moving. I'm bearish on oil, by the way. This is a counter trend trade. Therefore, it requires less size and more caution and less optimism about the outcome of the trade. But because it's a small trade and because I do think we need a bounce, there's a super key level on WTI right down here. We've got a triple bottom. It's actually easier. This is a day chart. It's actually easier seen on Brent Crude, as I pointed out in the last video. And let's have a look at this. And let's just zoom right in. Right, so there's Brent Crude. Maybe a weekly chart would be more helpful. We'll go back to WTI. This is the weekly chart on Brent Crude. What a flaw. This goes back to 2021. What a massive flaw we have here on Brent Crude. So the interesting thing about this, you might look at this and say, well, there's support there. We're going long. I have gone long. And I have looked at support there. But look at this weekly chart picture. It's not good at all. It's terrible. Let's get rid of this. We don't need this anymore. This is a really bad chart. And I'm going to draw a trend line in here, right from this top, when everyone is going, oil's going to $250. We started getting short at 100, and we remained short. And we took a couple of stops out on here in this big surge, where we got short very quickly. We remained short from 100. We haven't been long since then. But if I draw a trend line from that high all the way down, in fact, it's not the best trend line, but we do have 3 touches, even though there's some gaps in between. Don't really like that trend line. I think I can draw a better one by pulling it down to this level here, where we've got 2 candles touching it. So now we've got 2 touches there. Once again, not the best trend line, but a little bit better than the previous one. And we've got this downward sloping trend line with a flat bottom. Now, if you are a technical trader, which I am, although not as technical as most people possibly, I like to look at all sorts of things on my charts. But if you are a technical trader, you'll recognize this very, very in a very familiar manner. In fact, what I'm going to do, because this chart doesn't go back long enough, is I'm going to look for Brent Crude on a different ticker, which might, and I don't know which one to look at. Let's try Oanda. Oanda's data goes back an enormous long time. We've broken down below. Okay, this is a better chart. This is a weekly chart on Brent Crude oil over at Oanda, one of the other brokers that I use. The last time we broke below the 200 period moving average on Brent Crude oil was in 2021. In fact, the last time we actually broke through it for the first time on the move down was in 2020, January 2020, so a long time ago. And we broke back above it. We've traded above it ever since, and we've now broken and closed above it weeks and weeks and weeks in a row. Look at that moving average conference, very, very bearish. And if I draw that trend line onto this chart like I had on the other one, which is not the best chart, we've got a better one here on Oanda. Black Bull data doesn't go back all that far. And then I draw this flat bottom on here that we saw on the other chart. What we have here is a descending triangle. And a descending triangle, about 75% of the time, will break out to the downside. And the fact that that support line that we've held on, this is weeks, by the way, weeks, not days or hours. Once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. And now the 8th time. Normally, a trend line or a horizontal bottom won't last that long. I'm surprised this one has. I know why we've lasted this long. It's because we've had all sorts of problems going on in the Ukraine and in the Middle East, and that's kept this unnecessarily high. Now that might be resolving, maybe, with a Trump presidency coming in, maybe, or a more reasonable Harris and whatever the other guy's name is, can't remember his name. I never can. Don't like him very much. That's probably why I can't remember his name. But maybe they will have a change in direction on the Middle East and Ukraine as well. Unlikely, but you never know. But nevertheless, that's probably what's kept this oil price above this trend line and held it above the 200-period moving average quite a long time. But we're below that trend line. We're below all the moving averages. We're testing this bottom, testing it forcefully. I'm looking for a little bounce up to 74,000. That's all. Up to the underside of these two candles. I'll draw a line in there just to help you out with this too. Just a little bounce. Actually, let's do it like this. And then we will be back short again. So what am I looking for? The brush. So I'm looking for a little bounce to this area here. Okay, that tweezer bottom, swing low. It's also that swing low. It's also this conglomeration area here. And that's like 76,000. So somewhere around 74 to 76,000, something like that. Looking for a bounce from here up to that level. And then for the next move down, a final break and close beneath this horizontal bottom at about 72. This is Brent crude oil on Oranda. The same applies to WTI. So because that's a neater chart, that's why I looked at that chart. But the same applies to WTI. Let's have a look at this on the weekly chart. And exactly the same thing. All of these weekly bottoms, 1, 2, 3, 4, 5, 6, 7, 8, 9, blah, 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 blah. Not as neat as Brent crude, and a broader area beneath us, which means that we have to allow for a bit more fiddling around and faffing around in this bigger, broader area. Brent crude has got a very clean and perfect, neat horizontal support line within that downward descending triangle, which is more likely to break down than up. Keep that in mind. So if we do bounce on here, these are the levels that I'm looking for, this downward sloping channel, perhaps these lows here at about 70. Well, here on WTI, it's about 73 to 75 in that region there where this downward sloping trend line is, and the channel and the Fibonacci retracement number and these previous undercut lows. Once we get going, my target is the bottom of this red channel and a continuation of the green channel. That'll take us initially down to about 55,000 on Brent crude, somewhere down these swing lows down here at this area here, the bottom of this green block, 60,000 down a bit, down into the 50s, and then eventually a full retracement down into some of these where I want to put this on Oranda as well, but I'm not going to bother for now because we are running out of time. Only 10 minutes left before the natural gas premiere begins, but same sort of idea. That's why I like to look at Brent crude, because this is not such a neat chart. Generally tends to be a more scrappy chart. Brent crude gives you a very clear technical picture. This one, WTI, gives you a slightly more messy one, but that's why I keep both of them. So that's the weekly chart. What are we doing on the 4-hour? Well, we went long there. This chart is not live, but we are long and looking for that move. And, you know, if we don't get to the top of the channel, not quite get there, maybe we'll only get up to these moving averages, maybe this level here, this green level, about 72 or 73. We're now trading at 68. So maybe there's $3 or $4 or $5 in this trade long. It's not a full size position. As I said earlier, this is a counter trend trade. The direction is short very clearly based on the longer term charts. And so we're just taking this for a little nibble, little gamble in the long direction to set us up for the short. There's the 200 period moving average, the 100, the 50, the 20, maybe up around about the 200 on this 4-hour chart. On the daily chart, and that's at around about, hang on, let's just go back to the 4-hour chart. So up around about here, yeah, 75 or so, the moving average. Go back to the daily chart just to see where that is on the daily in relation to the other. And it's where the daily 20 period, also look at this on the daily chart. When you get so far away from the 20 period moving average, there's the 20, and that's at about the area that we're aiming for. So when you get such a long way away from the 20, you expect that this will retrace at least a little bit towards it. However, we are long, and if we don't bounce here, we have bounced a little bit already. We've bounced up to 68.50 already. If we are long here, but if we don't bounce, we don't carry on when this market opens tonight and earlier into next week, and it keeps on moving down, I will immediately hedge my long position on WTI and add more than the long side to the short side. In other words, I will reverse hedge it and turn it into a short with a hedge to the long side rather than a long with a a hedge to the downside, if you know what I mean. In other words, I'll add more shorts on than I'm currently holding long, because I do want to be short and I don't want to miss out on that move down. So that's WTI. I hope that was helpful. We've done really well on oil. We've traded short over and over and over again, time and time again. And natural gas, well, I'm not going to talk about it in this video, because in about 8 minutes time, the natural gas video will start. But there's that order block we talked about. Wait for the video to come up. It's super interesting. We've got to close above there on the 4-hour. We've got to close above there on the daily chart. And we've got to close above there on the weekly chart as well. And that's all set to go. And I'm looking forward to this actually moving up eventually, and moving up into the 3s and beyond that. What's very interesting here is that on this pullback here, look at the structure compared to the last time on the weekly chart we got down into that level. Almost identical. Let me just show you this, and I could actually just take this. Let's do this while we're here. This is natural gas, and we're talking about it too early because we've got a thing coming up right now, but this is a little bit more information than you will have got. So this move down to that triple bottom, let's just try and capture this. And then, so this entire move from the triple bottom, I just want to show you, this is really, really interesting. And I wasn't sure if this was going to work out and sort of repeat itself, because these fractals are really just toys in the end, I suppose. But look at what happened here. Now I can zoom in. They're just things to play around with and have fun with, really. There's the triple bottom on that previous move down. That occurred in 2020. So this is 4 years later, 2020, triple bottom, that's these red lines, move up, and a pullback down to the 78.6. Look what happened in 2020. Move up, pull back to the 78.6, and then a bounce. Exactly the same pattern, triple bottom, move up, pull back to the 78.6, and then a move up with a gap somewhere along the way. Slightly different timing with the contracts. That's why it's not exactly the same shape. But really interesting, we repeated exactly that. So not only do we have historical precedents and case law for this sort of thing to happen, we've also got to close above all of those levels. 2.25 was the number. We close above it on a 4-hour, daily, weekly, etc. And if we keep going for another 22 days, we'll close above it on a monthly chart too. So that's natural gas, and I won't talk about that now, but just in case, and don't go away, because in 6 minutes time now, the natural gas video will start automatically. So stay tuned to this channel. It should switch over automatically. If it doesn't, you can find the video on one of the other channels, on my, not one of the other channels, on my channel. Right, now, I'm going to go through one or two of these questions. There's a whole bunch that's come up, and quickly go through these in the next 5 minutes. Problem with Bitcoin is you can trade 24/48. There's no circuit breaker. Yeah, that is a problem. Scamify, and welcome to you too. I don't like trading on the weekends. We shouldn't be trading on the weekends. I don't like after hours trading on the stock markets. I don't like any of it. I think it's not good for human mental health at all. And I've only just started watching Bitcoin over the weekends in the last 6 months. I never used to do that. And you've been able to trade Bitcoin on the weekend for I think about 2 years now. So the fact that we're all looking at the stuff on the weekends when we should be taking time out, recharging, resetting, spending time with friends and family, being meditative, contemplative, walking on the beach, all that sort of thing. Instead, we're looking at our bloody Bitcoin charts. We shouldn't be. So good point that. And there's all sorts of problems with that. Good day, Marek from Bavaria. Lovely to see you. Please refrain from posting links. I will not refrain from that, Marek. I'm sorry, it's automatic. I can't help it. It's done by a computer. Rate cut incoming, more liquidity, Bitcoin goes up. Yeah, I'm not too sure about that, Pratim. Have a look at what happened during the last rate cuts to Bitcoin. Go and study those and see what you think. Oh, someone's spamming caps. Sorry, that was Streamlab. Streamlab telling people to stop, not telling me. Okay, all right. Stop spamming caps. There you go, Pratim. Don't shout. That's all that's saying to you. All right, gotcha. Pokemon cards have more utility than Bitcoin, probably. Although we'll find out. Bitcoin is a global network for asset transfer and alternative to banking. Huge utility. Common sense is as rare as Bitcoin. Yeah. Look, Bitcoin's one of the things that I trade. I trade all sorts of things. I'm not a Bitcoin fanatic. I'm not a Bitcoin all-in sort of person. I love trading Bitcoin. It offers another instrument. It offers different dimensions. It offers different volatility. It offers a different view of the market, really, different window into something completely different. I like it for that reason. So yeah, huge utility. Yeah. Right, now this is, yeah, let's not shout at each other, everyone. No one's ignorant, or we don't need to shout or be weird. OIH chart, will I take short? I haven't got that. I don't follow that, Mustafa. Thanks for the question. Boring channel, been aware of Bitcoin since it was 12, bought my first coins at 200. Ignorant for sure. Still has no mainstream users, turning stocks into actual cash. Costs naught in fees, and Bitcoin is 7%. Yeah, and 7% is a lot. 7% is a lot. That's half, 7%. It's 70% of what a good trader for a reasonable trader for a hedge fund or some sort of institution, if they get 11, 12, 14, 15, maybe 20% a year, they'll be pretty happy with that. So 7% is like half of that. That's 6 months work for a trader on Wall Street. It's robbery. Same with banks. I can't stand them. Yeah, so I'm not into the libertarian anti-establishment story, just into the profits. That's all. You enjoy the rebel story. Yeah, I'm pretty much the same. Pretty much the same. It's just another instrument to trade. And I'm certainly not all in on any particular instrument or any particular idea or commodity or anything like that. When I'm all in, that means I've got maximum leverage on a position. And for me, mostly maximum leverage is less than 1-to-1. In other words, unleveraged. I generally stay away from leverage. So I'm definitely not leveraged on Bitcoin. You're talking utter nonsense. Okay, Pratim, just stop it, all right? Don't be silly. No need for bad behavior here. Don't forget to like and subscribe. G'day, WeVibe. Nice to have you, mate. With your Woolworth sign for your logo. You still haven't let me know if that's the Woolworth sign. Folks, we've got to go in 2 minutes. I'll be hanging up very shortly. Let's see if we can get through some of the stuff. Okay, I'm not going to go through all this bullshit that you guys are saying to each other. It's not necessary. If you want to argue, go and argue on Twitter or something like that. Have a great day, folks. Wait for the natural gas video coming up in a few minutes, 1 minute now. Better hang up now before anything else happens. Otherwise, we might get cut off. So have a great trading day. Have a great weekend. Looking forward to the NatGas Open, maybe gap up. And Bitcoin, let's see what happens. And for those of you in my private group, please stay tuned for any Bitcoin and natural gas updates at the market open today. I'll let you know if there's anything that you need to take action on or that I need to take action on. Take care. Speak to you soon. Stay for the natural gas video coming up right now.